All right, guys. Paul Singh, the market speculator, with the free weekly swing report video. Normally we do this over the weekend, doing it Monday. Today we're continuing the pullback as Monday starts. They're calling it a risk-off pullback. We have the Fed meeting this week, maybe causing a little bit of concern here. Market down 1.6% after some extreme strength, hitting resistance and starting to pull back. So we've been watching this 200-day moving average very closely. If you've been following us here, we've been talking about this topping pattern for a while, and until that topping pattern breaks, the bias is to the downside, but the character of this pullback was a little different in terms of the strength of it and what we were seeing in terms of market breadth. Some really good market breadth indications that we won't go over right now, but what we do know is we were coming into resistance. We made a higher low, which broke the topping pattern trend, but we really need to get up over the 200-day moving average and then this right shoulder of this overall topping pattern. So no surprise there was a little bit of a pullback. We wanted to see consolidation for maybe a week or two and then a breakout. Didn't want to see this big of a pullback, but still the higher high is intact. And now we want to see there be a higher low as well. And what we would really like to see is a hold of basically the range we're at right now. So we'll see if that holds. A deeper pullback would get a little more concerning. We know we're in the midst of August seasonality, which tends to be weak. So it's no surprise that we're seeing some weakness here. And still overall, August has been very strong. This is where we started August. So we're still above, we're still essentially up on August for SPY. So that's what we're looking at here. The key word is caution. And until we pull back and find support, or ideally we break over the 200-day moving averages, those are the only spots we'd really start to get aggressive. Good time for caution right now. Part of being a good swing trader is knowing when to kind of pump the brakes. We see the Qs here pulling back as well. IWM is really interesting here. It had remounted the 200-day moving average and is now pulling back. And overall has shown a little bit of relative strength, which we want to see. We want to see small caps do well. Here's software, some of these growth areas pulling back to close to the 200-day moving average cloud as well. And then ARC, more of the small cap type tech stocks here pulling back hard below the 50-day moving average, but still bottoming formation is intact. So that's what we're seeing overall in the market. Again, good time to be cautious. We'll see how the market reacts to the Fed. And now let's look at some stocks. We have Cell H. We've been watching this one for a while. We're really keying in on stocks that had good earnings. And you can see the earnings breakout here. It's been consolidating just under all-time highs. You can see how strong the stock had been. A nice consolidation for a good almost a year here, a little less than a year, maybe 8 to 10 months. And now the breakout just at highs. So, and we're seeing relative strength today. The market's down. Almost everything is down today. If we look at SPY here, of the 500 stocks, essentially only 25 are green, and these are very safe type stocks that are green as well. But we have Cell H that is showing relative strength today, so we'll keep an eye on that one. Maybe it would even be a decent entry here. Pepsi hitting all-time highs, not the type of stock you want to see as a relative strength leader. Slow-moving safety stock. Pepsi. We have Apple here, which has been showing extreme relative strength compared to some of the other big tech and FANG stocks, nearing all-time highs, pulling back here. We'll see if it finds support. Not a buy here, but definitely is. We should be paying attention to some of these relative strength stocks. NVIDIA, important, pulling back to the 50-day moving average because it has earnings in 2 days on Wednesday. So we're going to watch NVIDIA's earnings very closely. Gas has been strong. Here's XLE after the big pullback, has been showing some relative strength. You can see where it is today. And MRO, there's plenty of these, but we'll key in on MRO above the 50-day moving average, making a higher low here. And we'll see if it finds support at the 50-day moving average. And finally, another stock that had good earnings, DEC. We can see here remounting the 200-day moving average, has shown strength post earnings. Now pulling back here, and we'll see if it finds support of the 200-day moving average. If it could find support here, it could set up the next run. And you can see here, a lot of room to the upside. Very good money flow as well. So those are 7 stocks we're watching here. we'll see what the market does, and we'll meet again over the weekend. Of course, you can be a member of the Swing Trade Report as well, where we go over the market every day in this chat room. Other than that, I'll see you next week, and we will see what the market ended up doing and if it's giving us a signal to start to get aggressive.